Hello, everyone. Welcome back to the RationalInvestor.com's Weekend Frivolity. This is our fun weekend show, our Broiler Chicken Show, which is kind of a funny reference. I hear they're actually trying to bring broiler chicken futures back, so if we're really lucky, maybe we'll be trading broiler chickens futures and even have a broiler chickens chart to show on a weekly basis. But nonetheless, it's been a little while since I think I last chatted with you guys in the public. I guess I do this weekly, so it's not too bad. But man, what a busy week around the site. So I haven't really been tweeting out too much. We're heading right into exams here. And I got to tell you, man, this running and sort of managing this school program sure is taxing. So, unfortunately, I'm just not in the position to be able to get up at like 4 o'clock in the morning and do my old day trading experience. But actually, it was really cool. Zach was telling me he's got a buddy of his who's day trading the New York Open, and he's applied the Davo to a lot of his ideas. And he notices when the Davo fires on this New York Stock Exchange Open event, and the list is all vetted and stuff ahead of time. When those Davos fire, just fantastic trading results. So, actually, I've been spending the past month or so working with a current level oneer who's like a computer programming genius guy, sort of vetting out a script and an algorithm to sort of what does a day trader's life look like. And we just came up with a really simple day trader's model, just when all three directions daily, 4 hour, 1 hour, are pointing the same direction, just hunt every single fractal you can see. And as you can see, as we were sort of bear trending there, it was all active, and now it's gone dormant here as we're getting mixed messages. We might actually get a really nice breakout here on the bull side here on Bitcoin. Anything can happen. The market will do any old damn thing it wants. And of course, if this turns back up, and you can see how close the daily moving average relationships are. There's still a little bit of a distance, but, if we get a breakout here and this W confirms, my hunch is that moving average will probably register across. And this is the crazy thing about being a day trader is you got to flip from I'm a bear, shorting everything I see. We might actually go right back into bull mode, and they're buying everything that they see. And, what is the halving event effect on Bitcoin and all that kind of stuff. Day traders don't care about that stuff. They just follow. We used to call it follow the chalk marks. It's really crazy is I used to actually have clients who were old enough at that point that they remember going to the stock exchange where people used to draw the bids and offers on chalk on a chalkboard. And that's how old these guys were. And that's where that expression came from, is just follow all the dust. Where are the guys doing business in which direction? All right, anyway, kind of a weird start there. Sorry, everyone. Can't even remember. We were talking about another different algo system there just a moment ago. Totally got sidetracked there. But anyway, welcome back to the Frivolity. Oh yeah, that's what I was going to say. I was talking about Zach. Zach, great to see. He was my TA for the Level 3 program. He's my right-hand man on the TRI SOF meetings we have on Tuesday nights. From the stock options perspective. Just a stand-up gentleman. Actually, I was really impressed people are actually reaching out to have tutorials with him, because I think he's on a pretty solid ground. And of course, he buys into this whole idea that we have to have a plan. We have to vet the plan out, all the different components. We have to understand what type of risk taker we are. And so based on that, how is the plan going to look, and how, that would define our activity in the market. We have to define how much money we're going to work with. So based on the type of risk taker we are, blah, 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 blah. It goes on and on and on and on, right? So anyway, point of the matter here is Zach, who actually doesn't fancy himself as a day trader, happened to stumble upon this setup. And so it's another setup I'm going to try and add to this site. But as I said just a moment ago, man, I find it difficult even trying to trade this little Bybit competition with the school goings-ons and my fully knowing that if I don't get enough sleep at night, I turn into a basket case and then watching London Killzone, waiting for the signal at 2 o'clock in the morning, and all hell breaks loose. So if anything, it's a really good commentary on if you are thinking about entering day trading competitions, you better well figure out what your schedule is going to look like. Because in crazy crypto land, you could be trading 24/7. Welcome to the frivolity. And okay, so, you know, what's the purpose of this video here, this free video? It's really, I mean, I would like to show you just sort of what we do on the other side of the TRI wall, if you will. And I really don't like that kind of paywall kind of thing. But at the same time, too, we really want to sort of take our next step into having automated signaling systems and stuff like that. And oh goodness, this stuff costs money. So it's a long, slow process. So, you know, please understand that try to keep the cost down as bare minimum as possible. But even just running this website, there is a bit of a cost. So that's sort of why we have the pay site the way that it is. And then, you know, that in essence, and you know, this whole signaling system, Sjord's been diligently working away on this for the past year or so, and he's coming into the home stretch, and he really does have a goal to have all this operating. And once this is actually up and operating, a lot of the commentary and a lot of the trade ideas and stuff that I'm going to actually talk to you guys about are actually going to be generated from this. So, you know, as we've said repeatedly, we'll know that TRI is there and we made it through the developer cycle when this is all up and running and firing. Right now, he did tease us back in the early November. He updated the data, but it's not update now, so please don't infer anything from any of this right now. And as well, too, you know, as a good karmic message, I like to run the school as a very low-cost way to get a very, what I would consider a very professional introduction to the world of trading. You know, I like to do these weekend free shows also as a way to let the level oneers ask any sort of unasked or unfinished questions that maybe they didn't get any clarity on for the previous week's material. And actually, ironically enough, most of them, they're like, yeah, I'll check in, I'll watch, but they're not asking a lot of questions, which in a way is kind of good because, like I said, just before this, we have the level 1 class, and Grim sits there and he goes through every single question and makes sure that the people feel as though they have a good answer. So I do, and you know, I don't want to put it on the screen. It's, you know, I want to put out screen names and stuff. But we had lots of positive feedback. And if anybody who's in the level 1 wants to attest to that through the chat, they are on YouTube. Just so, and if anybody watching in the public happens to see, I believe the level 1ers feel like they're getting really good value for their money spent. We really set them up not only with, you know, like a strategic vision of the world. And I got to tell you, man, I pulled this chart up there just recently. And I swear, this in essence is everything sort of everything that I do. And this is in essence, like what I believe is that I believe Bitcoin basically came along and ate gold's lunch. Now, if there was no Bitcoin, there was no digitalness of this. I honestly believe that gold would have done one of these crazy ass spikes relative to the Dow, but Bitcoin came along and ate its lunch. And the interesting thing about this chart is that this is not a proxy on the price of the asset. It has nothing to do with the price of the asset. This is all about relationships and the relative price of one asset versus another type of asset. It has nothing to do with Bitcoin Moon or, you know, Gold Moon or, you know, all that kind of talk. Nothing to do with that at all. It is purely just a, what is the preference in the marketplace to hard assets versus soft assets or paper assets or, you know, things like Dow Jones Industrial Average. And in a weird sort of way, I actually posted a, you know, considering that the higher ups in our society have really, this is actually a really good conversation, but I don't know if I can load it quick enough. Let's see if I can find it. U.S. Actually, that's a really good chart. I would love to talk to you guys about too. But darn. In the course material, I give the fear greed cycle. Maybe it's in here. Oh, damn. I can't find all these charts because something just came to mind. And I want to show you that long-term Dow chart. And what I'm worried about here, maybe we can find it over here. Dow. Oh, but I don't know whether that's going to work. Damn it. I hate when I can't find things and I want to show them to you. Anyway, I have no idea how to find it. Actually, you know what? It might, if we're really, really lucky, it might be one more try. Linda Bradford-Rajki, right? She always says give it, she says give it 2 tries. Don't give it 3. But we'll try once more. Come on, baby. Are you in here? You got to be in here. Anyway, I want to show you that long-term Dow index. Why do I have Euro on there? Long-term Euro Dow. Oh, maybe, you know what I did was maybe this was 2 different charts. Yeah, here we go. Okay, this is kind of cool. This isn't the best image to use, but it'll work. So, we're heading into this crazy-ass greed cycle. Right? We're making that. And it was so cool because, people were actually... we actually have a societal meme reference now to use. We can actually see the shift from one generation to the next. And that's this crazy okay boomer meme. I mean, literally, I could see the shift in our society. Like previously, the millennials didn't have the balls to, and it's understandable, if they were in their teens and their early 20s, right? Of course, like in... baby boomers still CEO, that kind of thing. But that's not the case anymore. Baby boomers are now out of the workforce. They're into retirement. They all have white hair, and it's now slowly turning blue. And I remember, I always make reference on the site, and you probably heard me talk about Mountain Man before, Brandon, but he would always make reference to the blue hairs. Because the blue hairs, ironically enough, they're actually the one that actually drive the bus in our society. But anyway... so the baby boomers now are officially gray or white, and now are slowly transitioning into blue. And the millennials are now seriously stepping in and starting to take jobs of influence and positions of influence in our society. You can literally see it. So anyway, this is a fun study comparing what the last 2 generational shifts, the baby boomers, their effect on the economy and the relative performance, and the greatest generation coming out of World War II. In a weird sort of way, I actually do think that this is going to look more like the greatest generation than the baby boomers, but who knows? Only time will tell. And the point being that, hopefully we all understand our society now is sort of, because of this whole idea of deficit spending, you can blame the Fed if you want, but really at the end of the day, this is all the responsibility of democratically elected politicians that won't actually make hard decisions about spending. That's where the blame for all of this current society is that we live. I will not be the next Herbert Hoover, right? That kind of talk. Because Herbert Hoover, through his greed cycle peak, said, look, you invest in the stock market and the stock market goes down, don't blame me. They're risky assets. Stock market went down, Great Depression. Republicans got run out of Washington on a rail and couldn't get back into office for a good 20, 30 years. So the Republicans learned a really hard lesson. Don't be the next Herbert Hoover. It's just that simple. So we lived, and especially with people that like Bitcoin, right? They hate this sort of world that basically the higher ups. I'm just going to hit the button again and see what happens. All right. I have no idea whether we're streaming or not. I wonder what's going to happen here. Will it stay the same? Hey, look at that. Hey, we're back. All right. I have no idea whether hey, look at that. Or not. Wow, that was freaky, eh? Isn't it bizarre how this stuff happens? That might have simply been me hitting the wrong button. I mean, I don't even have the OBS on the screen, but I did notice that I glanced over and it was gone. So I'm not quite sure what happened there. All right, where was I? I was talking about how the Illuminati, eh? The lizards were coming to take over. But actually, I would make the argument that that's really not the case. That actually, this is just business as usual. The only problem is we're kind of setting ourselves up for disaster here, aren't we? I mean, if we just call a spade, right? Now, there is one way to get around this. And I'm talking about the idea of the bankers just diluting the crap out of the currency. What's the one way? And really, I think it's probably a good exercise for everybody in the public to think about this too. And this is sort of better type in here. Got it back up and running. Let's see how long we last. That's what she said. All right, now I'm just being facetiously cheeky. All right, where was I? So there is one way to get out of this, and this is this idea of the Laffer I think that's the name. Can't remember. Laffer curve. If you run deficits, then that's that whole idea of the money multiplier effect. And technically, and this was the whole argument around Reaganomics, and George Bush Sr., he used to actually call it voodoo economics. Where technically if you spend a whole bunch of money and it generates $3 of economic activity and your tax rate is 33%, technically you could actually come out even if you go and borrow too much money. But the problem here is that your economy must grow. It has no choice. So if the stock market is sort of your ultimate leading indicator of growth in the economy, which way does the stock market have to go? Only one answer. And so it makes sense, you know, this was the 87 crash that sort of in the face of that, the central bankers say this economy has to grow, so take interest rates down as low as possible. And then, unfortunately, when we get to like, you know, interest rates are already really low, they have no choice but to then start, you know, diluting the actual purchasing power of the currency. So I might make the argument, and I thought it was really interesting, even Newmont Gold, think about this, people. Newmont Gold technically said that they had about $1 billion on their balance sheet that they could spend over the next 5 years or whatever. They could actually free up $1 billion. Now, if they could do that, why wouldn't they? They're in the gold business. Why wouldn't they go and start digging some holes, looking for some gold? With $1 billion, you should be able to dig some pretty damn deep holes. Hey, doesn't that seem logical? But what do they actually decide to do with their money? They actually said that, no, we're not going to go dig holes with the money. We're going to go and buy our stock back. Why the hell are they doing that? So it just goes to show that, you know, what I think's happening here is that it's not so much that these companies are doing more business and they're ramping up. It's that I don't know how to describe it. It's like maybe the barracks scenario isn't the same, but you know, you see it right across the stock market. Companies are choosing to buy their own stock back with any money that they have, versus anything else. Like Anyway, so the point here is that, ironically enough, this is the kind of stock market where it's almost like it has to go up. Like Alex Sturck used to call them rise-only markets. I remember speaking about crypto. And, of course, the sad part about that is at some point this bubble will pop. I actually think that the United States of America dodged a bullet. The bubble could have popped in 2008, and the whole United States of America would have gone kaputski, right? Just like the Soviet Union, when they ran out of money, they went kaputski. But the game has gone on, and U.S. dollar hegemony, they basically forced the world. You have no choice. Your standard of living will be diluted because we are diluting the purchasing power of the U.S. dollar, i.e. printing dollars. All this debt that you thought you were going to get those old dollars in, we've just turned the printing presses off. Here's a whole bunch of new dollars. Whether they're worth less in the marketplace, that doesn't mean anything. And that's the world that we lived in. And usually, if I understand history correctly, you really only get these breaks when these big empires are on the brink. And either somebody steps in and saves them, or they just collapse. And I get the feeling that basically that's what the Fed did, was they stepped in and they just bought all the bad paper, print a whole bunch of new U.S. dollars. It sort of sits on a side account. And the interesting thing is that back in the last fear cycle, there was a big debt balloon in the real estate market that had to be resolved. They called it the S&L crisis. And, of course, we all know the Tennessee Valley Authority. That was the last fear cycle apex. And the, Roosevelt being declared a communist and socialist and nationalizing a whole bunch of bad debt through that cycle. So actually this whole sort of debt reset about once every, I guess it's about once every 70 years, I think the interest rate cycle is. We're long overdue for something along those lines. But it is very cyclical. So the point of this chart is that we are transitioning. Do we have to have some sort of recession or something happen here before we head into the next growth cycle? That's, I would still say yes, but in this broader perspective, like this is a recession. This is a recession. Could we have, maybe a 2 or 3 year period here where we get one of these moves? Sure. I mean, it's only natural. And my hunch is it's probably on the market has too much debt overhanging it, and the central bankers have to come in and dilute the purchasing power of the currency once again, blah, 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 blah. And everybody's sort of expecting that. When is QE4 going to happen? We came close over the summer. Yield curve did invert. And it's interesting. The guy who actually created the yield curve inversion thesis back in the 1980s, he was going all across the internet going, the curve is inverted. It's 6 months and then we're in recession. Ah! So it's interesting. The stockcharts.com guys that I like to follow, their tool never did go inverted. But it'll be interesting to see, whether Mr. Yield curve inversion guy was right. And we should head into a recession in a weird sort of way, if we actually go and look back at what the Dow did through that greatest generation cycle. I think this goes back far enough. Yeah. I get the feeling we're in this kind of bull market. And you notice, maybe we have breaks like this and then the market goes sideways for quite a long period and then we start working our way higher. This break here from this peak, that's 526 down to the low is 400. So that's, that's a good 20% stock market correction. This peak here is 212. The trough there's 155. So that's like 60 points. That's a 30% correction, right? 25, 30%. That's the kind of world that I think that we're living in. I don't think we're in this part of the cycle to create crashes, right? This was the post-U.S. Civil War, Gilded Age, their bubble peak, 1920s, RCA, radio was all the rage, very much like crypto this go round. And actually this would be more like the dot-com boom. similar sort of bull markets. And this is sort of the crash scenario. And then at the end of this, Roosevelt comes out and he nationalizes all the bad debt, blah, 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 blah. And the base is formed. Pricing of U.S. dollars changes. They go to the gold standard, all that. And that sets the base for the next cycle. And then we do it again. This case, Tricky Dick saw the big M top in here coming out of, this is the greatest generation, the people who fought the World War II. Think of George Bush Sr. And their greed cycle, and this is their sort of fear cycle. Tricky Dick took the Americans off the gold standard. And even here in 1980-81, this is where Ronald Reagan said, you know what, we don't have to balance budgets. Let's go spend money we don't have. Voodoo economics, Reagan economics, blah, blah, blah. And, of course, the stock market loves that kind of talk. Throw more money at capitalism. Yay. So the whole point of this conversation, and I'm sorry it's taken me forever to get back to there, is that this chart that I showed you right at the beginning, if I can show you it, wherever it is. Where'd I put it? It's one of these charts. There it is. This is a world where that particular fear cycle, that was 1980, gold and Dow almost traded at parity. And the irony of it all is that I would make the argument you can see the base through the dot-com boom. They're just giving gold away. You literally could not. In fact, I remember, because I was a broker through this, there was one stock that was trading at like a fraction of just the cash they had on the books. Just a fraction. And, just through the summer, we found a stock that was trading just a little bit below what they actually had cash on the books, and the stock has already doubled since then. And that was just from the summer. So it just goes to show that if a stock's trading below the actual cash that they have on the books, that's a pretty good buy. So we had tons of gold stocks that were trading, below cash on the books. That was basically gold's rally. And then something came along in 2011. 2011, doesn't that sound a bit familiar? Did something come on the scene, and since then, basically ate gold's lunch. This happens to be when Bitcoin happens to come on. Things like, there's Bitstamp. Yes, I know Bitcoin was around a little bit longer than that, and actually got its sort of basis in the 2008 financial crisis. So that would be sort of in that spike. But in a weird sort of way, actually, I think that rally window was the transition, and I would make the argument, and here what I've done is I've just said, let's compare Bitcoin and gold together relative to the Dow. And you notice that, in essence, basically right through that cycle apex, and the sick thing is that basically I've been talking about this for the past 15 years, drive it crazy. We got another one of those sort of lack of confidence in the financial system, lack of confidence in the U.S. dollar, and gee whiz, right back up to almost exactly the same ratio level as the 1980 fear cycle apex. I mean, I find that staggering. Now, as I said before, this has nothing to do with Bitcoin price itself. This is all about relationships. And so, we might sit in here for the next 10, 15 years because the Dow keeps going up. If Bitcoin's going up because the Fed's diluting the system and printing more money. And Bitcoin, of course, has, built-in inflation as itself, but is an excellent sort of, digital gold store of value. It should go up if they start diluting the U.S. dollar. But in essence, just like what I talked to you about Newmont, what's happening in the stock market, paper assets, is people are like, to hell with it, I'm just going to go buy the stock if I have free cash. And almost doing the same thing, taking the amount of circulation of the stock in the marketplace down, almost to the same sort of effect that they're taking the U.S. dollar index down. And it'd be interesting if companies actually wanted to come up with a ratio to make a zero-sum game. I'm not quite sure about that. That would be an interesting thesis. Anyway, so the point of the matter here, I thought this was a really interesting relationship. This is stocks relative to Dow. And I actually believe that, if they keep this crazy QE game, like somebody there says, but what about the effects of QE, ZRP? Like, I'm not quite sure what ZIRP stands for. But no, see, I would disagree, Bob. Like, what was QE? QE was nothing more than the banking system taking the bad loans out of the system. They airbrush it, they say helicopter money, blah, blah, blah. But really, what happened? And if you look at those quantitative easing statements, the Fed even said, we are buying U.S. Treasuries, we are buying Fannie Mae paper, we are buying Freddie Mac paper. So that's really what they did, and then they just gave the holders of those bad bonds cash in exchange, which they just printed up out of nowhere. Has that happened before? Yes. Like I said, Tennessee Valley Authority. Bob, you could make the argument that Tennessee Valley Authority was exactly the same thing. And then you could also argue that the SNL bailout in I think it was 1984, the final bailout came in. I would argue that was actually pretty much the same thing. And it's weird how people have forgotten about the SNL crisis. I happen to live in Southern California through that, so I do remember that specifically. All right, anyway, the point, interesting start to your conversation today, but I just wanted to give you sort of like a strategic vision kind of conversation, especially for the level oneers who were just finishing off there. They're getting ready for their final exam. So by all means, if there are any level oneers watching over on YouTube or here in the Hangout, and you still have any questions, feel free to ask. I got to say, I'm very proud of the student body this term. People came to class, they bought in. It was great to see some people, they saw certain topics that were taught and they just ran with it. Also, too, it's kind of a funny tweet I put out this morning. I still don't see the education level in the public discourse about a lot of the concepts that we teach on the site to the level that I think that actually does this this community service. I put out a tweet this morning because I still see that a lot of the sort of talk in this space is very it could help, maybe it couldn't, maybe it does, maybe it doesn't. Like they come up with titles, what are Bitcoin price gaps, how can they affect price? But it's very fluffy and it's not articulate. And I actually had to respond to these guys and say, no, actually gap theory is actually a trading theory that was actually developed in one of the concepts that we teach in our level 2. Hint, 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 all you level 2ers, you better know this for the exam, is Gartley's gap theory. Right? Now, I don't specifically quiz on the formula for Gartley gap theory for the exam because it's pretty difficult, but just simply understand that actually, I would actually say that things like gap and gaps, they're extremely powerful trading tools, and it's one of the cool components of our education program. And I was even talking with another gentleman who was showing me these really cool sort of circles on charts, circles and circles and circles this morning. And I was like, well, if you can actually find somebody that can actually give a tutorial where, okay, I want to do these circle studies and I want to know that I'm drawing them right. So what is step 1? What is step 2? What is step 3 to know that I'm drawing them right? Then please, share that in the community. But I haven't found that. So it's very difficult to actually find on the net. Sort of step 1, do this. Step 2, do that. Step 3, do that. You now have a tool in your tool belt. Go and start adding it to your trade setups. And, of course, have those trade setups all in your trading plan and spreadsheets and journals to record your emotions, yada, yada, yada. You've heard that 100 times from Brian. All right, so like I said, very, very proud of the student body. Super, super dedicated people. And the feedback that I got from the level 1ers this morning was that they felt like they got really good value for their money spent. Yay. Grim is an awesome instructor. Yay. Brian loves to throw in his 2 cents through class. Boo. Just kidding. All level 1ers should have a fun joke at that. Marat, awesome TA. I mean, we have a really, really cool level 1 program, and I think it really sets people up for success in this space. Level 2ers, we actually just trained up a new instructor. I think he feels pretty confident, Kiran. And he and I worked through the level 2 program together, teaching the student body, and I think they felt like they had a really good sort of 1-2 punch. And of course we had Joshua. I think you were our TA for the level 2 program. Such a great guy. And I even told him today, I said,